And on that note, let's get into it. We are really thrilled to be talking about regeneration and water today. And again, everything from oceans and coastal ecosystems to freshwater systems and kind of all of the water cycle that goes within there. Very specifically, we're going to highlight a couple of investments that are doing things pretty differently. In our chat right before this, Vicki was mentioning that in their strategy, they are pretty literally the first people ever doing this new approach. And so that's what we're aiming to bring to you, the things that we're seeing out in the market that are really special and interesting and innovative, and that we're hoping are glimmers of the future in different ways. They are pretty diverse examples, and I'm going to share that up front because sometimes when people come to panels, we expect everything to be pretty similar and to tie up in a really neat bow. But the truth here is that we're going to need every possible approach to solve these global issues. And so we intentionally brought together a pretty diverse panel and diverse set of examples to be able to dig into some of those pieces. We are speaking with four incredibly interesting and knowledgeable people today. I'm going to go through just some quick intros so that you all don't have to when you get to your sections, and then we'll dive into some of these examples more specifically. Angie Brathwaite is joining us, and she's a co-founder and director of Ecology and Management and Blue Finance. Angie is a marine biologist, which I think is incredibly important to have on this panel. She headed the marine research section of the Coastal Zone Management Unit in Barbados. And what she does really powerfully is bridging kind of between the conservationists and the investors to drive a really unique set of investments and projects that protect marine areas and are able to find a sustainable business model to do so. We're excited to have you here, Angie. Dr. Eric Hallstein is a Deputy Managing Director of Water at NatureVest with the Nature Conservancy. Eric leads the Nature Conservancy's partnership with the Renewable Resources Group in the Sustainable Water Impact Fund, which I think I can call SWIFT, but Eric, if that's not how we pronounce that, let me know. Eric has over 20 years of experience in tech startups and venture capital and private equity. He's an economist by training. He has a lot of experience in conservation and climate change science and management. And in his example, he'll talk a little bit about how they're using kind of a vehicle that looks traditional on the outside, but the innards of it are really built in a way that pushes the boundaries of how these vehicles can make and drive and incentivize impact. Vicki is Vicki Benjamin, founder and CEO of Karner Blue Capital, has, beyond founding the organization, led KBC's development of a series of really thoughtful large cap strategies focusing on biodiversity and ecosystems and water and lots of other spaces. And I'm excited for her to share about that more. She's also driven KBC's research approaches. So I think she'll mention a little bit about this, but they've done a lot of research that is helpful both for their own work and in helping the industry figure out what they need to do to drive change. She was previously CFO at Calvert Investments and a partner at KPMG, which is a really beautiful segue to Sophie. Sophie Heading leads KPMG's efforts globally to help companies and governments deal with today's geopolitical challenges. What that means is that she's a dot connector between these macro political trends and related challenges. And she sits down with global businesses to help them understand what's coming our way, what those challenges are, and what exactly they need to do about it. And that means that she's the perfect person to help us paint a picture of the kind of landscape here, what is happening with water and ecosystems worldwide and what we need to do about it. So Sophie, with that, can I hand it over to you to give us a little bit of background on what your research is showing?
Sure, thanks, Lisa. Well, if we just take a step back, I think we've seen so much momentum around the green agenda in the past couple of years, right? It feels like everyone's talking about it now. The average person actually knows what COP's about, whether it's, biodiversity, which we just had, or climate change coming up. But what really kind of struck me when I first entered this kind of field or started working in this field was that when we talk about the green transition or even kind of ESG or environmental, social and governance issues more broadly, we tend to focus on the terrestrial implications, the land-based implications of that. And I think the interest, the investment, the governance structures have really followed that. And so maybe it's not that we've ignored, but we definitely haven't paid enough attention to the role that oceanic ecosystems play in regulating the climate, but also contributing to socioeconomic development. You know, I have a million facts that I absolutely love about the ocean, but we're talking about an ecosystem that absorbs up to 70% of the carbon dioxide that we put into the atmosphere. You know, if oceans weren't around and they weren't absorbing all of the excess heat, our planet would actually already be 36 degrees hotter if it had gone into the atmosphere rather than the oceans, which is pretty incredible, right? And as we all know, unfortunately, we continue to damage this ecosystem. And in doing so, we're actually risking reversing all the progress we're making in terms of addressing climate change. You know, oceans absorb about, or store, I should say, about 50 times the amount of carbon compared to the atmosphere. And so when we continue to damage them, whether it's through, you know, marine activities or through land-based, you know, sources of pollution and waste, we risk these ecosystems releasing that carbon back into the atmosphere and kind of reversing any progress that we're making. So the kind of protection and the regeneration of these systems are so critical. And I think that's why we started seeing more of a conversation starting to happen around what we call the blue economy. Now, there's no real standard definition for that yet. I like to think about it as the kind of underwater version of the green economy. So the sustainable management of, as you said, the kind of coastal, oceanic, freshwater systems as well. And because of that, it means it's really an issue for all sectors. Because when you think about it, all parts of economic activity are dependent either on water or the ecosystem services that these habitats are providing. So then how on earth do we manage this, right? Because we know exactly how hard it is to manage a global common, which is of course what we're trying to do with the atmosphere. And the kind of politics and the economics around that is making it really difficult. And I think managing the oceans is even harder, and it requires even more kind of government support, because ultimately governments are the kind of blue asset owners of a lot of these ecosystems, whether it's the ones that fall into their national jurisdiction or whether we're talking about the very large proportion, so 95% of the world's total habitat, which falls into the high seas or international jurisdiction. And that, of course, requires cooperation and collaboration between politicians and between countries, which is, as we've kind of seen with climate, is not always easy to achieve, right? But we're going to have to make this work because, you know, these ecosystems offer such massive potential. If I just look, you know, purely at climate change as part of this, oceanic ecosystems are arguably more productive, better at storing and capturing carbon than some of their land-based counterparts. You know, one of the most obvious examples for me is seaweed. You know, it requires no fresh water, no fertilizer. It's very fast to grow. It offers it captures 5 times as much carbon as land-based plants. And it's used in everything from kind of food and fuel to cosmetics, pharmaceuticals. It's even a plastic kind of replacement. But my favorite example is actually whales. So one great whale is the equivalent to 8 100-year-old trees. But their contribution to the kind of nitrogen and nutrient cycle of the oceans is such that greater whale activity, if it just leads to a 1% increase in phytoplankton, that has the cumulative impact of the 2 billion trees. So that just gives you a kind of an idea into the sheer kind of scale and potential of a lot of these solutions. But I think, you know, the blue economy, we often call it the blue wealth of a lot of these countries. It is most definitely an underutilized resource so far in our kind of fight for a more sustainable future. So I'm very excited to hear from, you know, Vicki and Angie and the other panelists to understand how they're kind of driving change in this field.
Thank you, Sophie. Angie, that's a good segue, I think, to your work. Could we jump in a little bit more about Blue Finance's work and marine protected areas and everything that you're driving?
Yeah, definitely. Yeah, so we're going to come from the big ocean to marine and coastal ecosystems, primarily coral reefs, but also mangroves and seagrass beds. Sorry. So I am a marine biologist. That is what I do. And I'm working with Blue Finance. And I have to say that, you know, the very first time this whole idea of investment was introduced to me as a conservationist, I was like, hell no, that is not going to work. We don't do this. We're in the conservation field and we're not about this sort of investment. So it took a bit of a sea change for me. So I can definitely understand the hesitancy in the conservation world looking at investment. But this is what we're trying to do and this is what we're trying to change. So we work specifically with marine protected areas. We call them MPAs for short. And I think most people are aware that these are, you know, areas designated in the sea where you have a serious focus on trying to ensure that the ecosystems are healthy, or at least effectively managed. In many cases, the marine practitioners know what they have to do. In many cases, not all, but they don't have the resources to do it. And we're not, right? Because as marine conservationists, we usually rely on government subventions and we rely on grants, and they're both very fickle. It's very, very difficult to really develop effective management relying on those two. So unsustainable finance is one of the biggest issues for managing marine protected areas. And what we do is we look to provide this upfront capital that marine protected areas need in order to do their job. So we prevent or produce that upfront capital, or we find it for them. And then we work along with the MPAs to instill not only an increase in management effectiveness, but also a change into a more entrepreneurial way of doing things so that the MPAs can generate sufficient revenue for themselves. Our model is based on tourism as well. So far what we've been doing, and we're now working with 6 MPAs around the world. I'm at one of them right now in Zanzibar. What we do is we provide blended finance solutions catered towards each MPA. So we look at impact investment and we look at grants. And this, of course, provides upfront capital. We just provided 1.2 million US for Belize. And we're working with the impact investors, Althelia Morova, and they manage a sustainable ocean fund, which is a fund specifically, you know, looking at the ocean. So we get that money for the marine protected areas. And then, as I said earlier, we work along with them to upgrade their facilities so that they can manage more efficiently, but also they can attract tourists. And we're looking at you know, we're looking at green tourists. There are not many gray tourists, as I would put it, that come to marine protected areas. They will come and enjoy, they'll pay their user fee, and that money will go back into the marine protected area, as well as looking at other things. And we can talk about it later in the question and answer session. I think that's about all I want to say for now.
Thank you, Angie. We'll take a little bit of a different tact here and go to a different model. We're throwing a lot of different approaches at you and excited to dive in a minute. Eric, can I call you in and ask you to talk a little bit about your work with RRG on SWIFT?
Yeah, absolutely. And the bridge maybe to this from Angie's remarks is the comment about skepticism from the conservation community regarding the role of the capital markets and investing. And I by training, I'm an economist. I've been with the Nature Conservancy for about 9 years. And the Nature Conservancy is a global conservation organization. We work in 72 countries around the world. But we have historically been trying to protect biodiversity on land, water, and oceans through more established mechanisms like philanthropy and government funding and policy. As over the last decade, we have observed that quite a lot of the remaining biodiversity is in working landscapes. It's on farms. It's in places where people are using those landscapes to produce the food, fiber, water, things that we all rely upon. We've realized that the capital markets, partly through their distortions of those markets, are influencing kind of negative conservation biodiversity outcomes. But we've also seen that some of the more progressive investors are in fact well positioned and have the financial resources to really make a difference. And within that broader context, we've been focused in part on issues of water scarcity. And globally, roughly 2/3 of communities will face some form of water scarcity over the course of a year. And much of that is driven by agricultural demand and use. And so my team leads a set of collaborations and projects with other investment partners. The particular one that's of interest here is a relationship we have in a fund that we helped launch and supported them in launching, named Renewable Resources Group. And it's a roughly $1 billion fund that RRG raised. It invests in land, water, and ocean, land, water, and agriculture globally, and then reoperates and remanages those assets in ways that are more sustainable. So a good example of that is one of the early investments was in a very large dairy farm in California, roughly 40,000 head of cattle. We retired the dairy and converted that farm into a groundwater bank, essentially a below ground water reservoir that captures water that's in excess during the rainy part of the year, and then makes it available to farmers or sells it to farmers during the drier parts of the year. And that project generates a financial return through the water and the banking of that water, and generates a sustainability benefit because on the surfaces of those groundwater banks, we're creating wetland habitat for migratory birds and other animals that are endangered or protected in that area. The model in launching that fund, I think the interesting thing maybe we can come back to in the Q&A is that we wanted to access resources that were held by institutional investors. And in order to do that, co-designed with RRG, a fund that really from the outside in looks quite like a standard institutional product in terms of it's a 10-year term, it has maybe 2-year extensions, it has a particular return profile, it is a fiduciary, and it's competing with the real asset allocations from some of the bigger investment firms. But on the inside, the Nature Conservancy is an advisor on all of the science and the conservation issues. And we look at each of the transactions that our partner originates, and we evaluate them to make sure they're not going to do any harm, or if there's ways to restructure them so they do no harm. And then we work with them to define a set of really positive environmental outcomes that could be achieved within those transactions. And we provide that science and conservation expertise to them as they're working on figuring out how to financially underwrite these deals to the criteria of that fund. So it's really interesting. It's been a good journey. I'm happy to talk in the Q&A about how it's going, lessons learned, what's worked well, not worked well, sort of how it's playing out now that we're a couple of years into that fund and have a number of transactions and have a couple of years of experience to rely on. And maybe I can speak to sort of the healthy but at times challenging tensions between conservation outcomes and financial outcomes, and how we're navigating that tension, which is, it's real, but we're I think learning a lot and having some good outcomes to talk about. Thanks, Lisa.
I feel like for all of these, we're getting just a taste, and then we're going to have to dive in so much more in the Q&A. Vicki, let's hand it over to you. Again, a very different approach, but would love to hear about some of the work that you're doing. We may need you to unmute. There's something happening.
There we go. Sorry about that, folks. When myself and my co-founder, Andrew Niebler, started the firm Carner Blue Capital 5 years ago, it was really centered around conservation and biodiversity using the capital markets. And as everyone probably knows, not just oceanic, but all biodiversity. And as most people know, there is half of the global economy, approximately $44 trillion, is dependent on biodiversity. And what I was really surprised to learn is that about a quarter of that is dependent on marine ecosystems. So just recently, we started focusing on the marine and the ocean economies. As everyone probably knows, and I think Sophie just mentioned, ocean marine life, or more specifically plankton, I spent a lot of time learning about plankton, is responsible for the delivery of over, and this is just plankton, over 50% of our carbon and the sequestration of 30% of our carbon and 50% of our oxygen for the planet. That's just one species. And the thought that that's threatened, well, quite frankly, the world will be inhabitable if we don't fix this. So what are the drivers of marine biodiversity loss? I mean, climate change, certainly, we all know that. We're working quickly. It's amazing how fast we waited 40 years, but we seem to be in gear now on climate change a little bit. I'm a little more hopeful, I think, than Angie on climate change. There is definitely a problem with over and illegal fishing, destruction and deforestation of land, and probably the worst problem of all is pollution. And we all know about ocean plastics. And literally, what was amazing that I found out was 80% of ocean plastics really started out in the rivers. So freshwater pollution, freshwater dumping of straws, et cetera, ends up in the oceans. So what does Karner Blue Capital do? Well, we believe at Karner Blue Capital that the capital markets have a responsibility, and that this $44 billion of global GDP that's at risk, and the biodiversity funding gap, meaning that all of the governments and philanthropic organizations it is no longer a zero-sum game. They cannot do it on their own. We are using resources and impacting nature so much more than those organizations can catch up. It is now corporations and consumers have to pitch in. Under that hypothesis, Karner Blue Capital has started believing that we should be able to select the best companies that have biodiversity risks and impacts and put them into strategies and provide outperformance for our clients, being that there is the risks are largely unrecognized right now by the formal community. And by identifying those leaders in the industry and engaging with those that lag behind, we offer an opportunity to change the behavior of these stakeholders. And I think that that is the fundamental fulcrum of our hypothesis with the capital markets, a little bit different than what Eric's doing. But we believe the finance community, including constituents of the banking, investing, and insurance agencies, will be pivotal in the success of moving corporate stakeholders to different protocols. Because if you're not lending to, and this is all in the news now, fossil fuel extractive organizations, they're going to have a hard time. Their cost of capital goes up. Their behaviors have to change. And so it's our philosophy that we need to start moving the capital markets through the finance lever to change the behavior of companies towards the ocean and the species that dwell in there.
Well, thank you, Vicki. You've queued us up kind of from the high level that Sophie presented to some of these specific examples from Angie and Eric and Vicki. And Vicki, you just wrapped us up on a really great segue point. So I think here is where we'll move into Q&A. And we've got a couple of questions coming in already. For those of you who are thinking of questions and haven't yet sent them in, please feel free to do that. We're going to dive in. There's one that's come in, and thank you, Sabrina, for this question around the future of blue carbon and blue carbon credits. The question is, it feels like trees are the main focus and oceans are being left behind. Sophie, I know you've been doing some thinking about blue carbon. Is that, could I call you in on that one?
Yeah, for sure. It is very true. And that kind of goes back to what I was saying with all of the kind of interest in investment and governance frameworks being, geared towards onshore solutions. Although we're seeing a rise in particularly nature-based solutions for carbon reduction and removal in the oceans, it tends to be, we see the most projects where we've got kind of onshore methodology. So mangrove forest or restoration of mangrove forest is very, very popular. Seagrass as the kind of biggest offshore first solution, we're only just seeing the first carbon credits come through this year. And then there are a whole range of other projects, whether it's still in kind of coastal and national waters or beyond, that are in an even earlier stage than a lot of onshore solutions. For example, looking at directly capturing carbon from seawater instead of the atmosphere and that basically means that the ocean acts as a sponge. You can also, you know, they're looking at geological solutions as well in terms of adding minerals. So there are definitely a lot of solutions out there, but they are, completely agree, they are at an earlier stage, which is a bit of a, which I find quite interesting, because the blue carbon removal solutions, I tend to think, are more scalable than their terrestrial counterparts, right? There is a limit to how much you can reforest in the UK, as an example, and it tends to compete with food supply as well, or other, you know, competitive uses of land. Whereas in the oceans, you can dedicate a lot more time, and there can be a lot more co-benefits to investing in carbon removal and reduction solutions. So my bet is that I think carbon removal, blue carbon removal, will capture an outsized share of carbon offsets in the next 10 years.
Thank you, Sophie. And you touched on something towards the end that I know, Eric, you've been thinking quite a bit about. Can you all hear me? I just switched my audio. Yeah, okay. Eric, you've been thinking a lot about food systems, and I know that there was some recent research that came out. Would you talk a little bit about what you've been finding there?
Yes, and it's really going back to the comment I made in my introductory remarks, that really the need for financial resources for all of these issues dwarfs the available resources. And there's an interesting report by Andrew Deutz et al., a bunch of authors, that came out about a year ago, identifying that the funding gap for biodiversity protection is somewhere around $700–800 billion per year starting in 2030. So this sort of kind of massive number. The challenge, and much of that is in these working landscapes, the challenge is what I think that Sophie is putting a voice to, which is in a sense, given how the system is rigged currently, and the level to which the environment in a sense is treated as something that's external to the economic calculus, that it's a long ways to go to expect that the system itself, without some kind of modification or change to how we think about investing, will close that gap. And in particular, so much of the productive land on Earth is already being used in some way, either formally in the economy to produce goods and services, or even in some cases informally, such that realigning the market or those systems with a better balance of the kind of productive food outcomes and environmental needs is quite challenging. And even in something like a timber space, which isn't strictly food, but for timber production, the notion of carbon offsets is in theory very attractive, but often conflicts with the financial requirements on timber harvesting. So I think that what Sophie is describing, and looking at these cases where either there are ways in which those food systems can be managed such that they do better financially and also better for the environment, or where there's less conflict, like, for example, arguably sort of an underutilized resource in terms of the oceans, in terms of their role in food production in these systems, then I think those are particularly promising areas to look at. The solution ultimately is going to be some combination of changes to the ways that financing and investing work, but also I think rewriting the rules and the policy that starts to bring in some of those environmental externalities into the actual economic calculus, and capturing kind of the fuller value, but also impacts of what happens when we grow food for people.
Vicki, I wonder if I can call you in on this. It's a little bit of a pivot of the question, but you've done a lot of thinking about how some of these really large companies are working in a space. They're not going to get out in a particular space. But by investing in them and kind of encouraging them or pushing them to shift their practices, I'm thinking about the example that you gave around indigenous communities and mining and some of those extractives. You've done a lot of thinking about that. Could you jump in on this point that Eric's just made?
Sure. I think that this is a really a great group of people to talk to about. I kind of think as he was speaking, I was thinking, my goodness, Eric and the Nature Conservancy and WWF and other organizations, kind of come in and unfortunately, and to their credit, sweep up after the rest, after the companies and corporations and this very consumer intensive economy destroys biodiversity. And nothing, I'm working on a separate project related to the orangutans and what happened with the rainforest. And if you can, the issue has been historically, listen, that we have not been able to put a price on nature. And if we can't put a price on nature, how much the coral reefs are worth, if we can't do that, we have no way, and this is what Eric was alluding to allocating those costs down to the companies and the ultimate consumers that use and negatively impact those resources. And so it's up to organizations like the Nature Conservancy and others and governmental groups that come in and try to rectify that. And I think that when we really try to do and start to understand, and we're starting to do that with carbon credits, we're starting to understand the cost of carbon. We are a long way away from biodiversity valuations, and even further, much to my chagrin, a value on nature, oceans and marine ecosystems. And until we can pass that down, we're going to be reliant on organizations that come in and conserve and try to rectify the damage that especially the food industry is doing, because we're challenged. You know, Eric, we are absolutely able to produce enough calories, but we just aren't distributing them correctly right now. And so there's a lot of socioeconomic systems that need to change so that we're able to allocate resources better, including food.
Angie, that reminds me of your work. So different angle, different kind of approach, but you're also bringing together folks that that don't speak the same language and don't have the same angle on things. You're talking to conservationists, and you mentioned a healthy skepticism of the finance industry, and investors who have healthy skepticism about other things within the conservation space. I wonder if you would be able to talk about how you do that. How do you bring those folks together? What are the tensions you find bubbling up? And I guess, how do you create a conversation that creates these really incredible and unique models that are able to protect marine protected areas?
I'm going to try and hold that question and answer it. But I wanted to speak to Vicki's point on valuation, which I also think is super important. But we have valued corals into the dust. We have valued them, and we have gone and we have spoken to the policymakers, and we have said, listen, this coral is worth X million or whatever. We have done it. We have shown, you know, the impact on your economy when you destroy coral reefs. We have shown the value of them in monetary terms and in social terms. And you know what? Governments will turn around and say, and I'm from the Caribbean, I'm speaking of the Caribbean. They will say, we know, we get it, but we have to spend X amount of dollars on crime, and we have to spend X amount on education. And these are actually more visible issues. And I think that is going to continue to be the case, that, you know, the politicians and the policymakers understand, but they can't actually put, or they can, because these ecosystems are so important, but they don't see that they can put the money there. They're going to put it in crime, you know, and they're going to put it in education. That was one. Two, I'd love to focus on the capitalists and so on. And I find we have the other issue in the marine ecosystem, the nearshore marine ecosystem, because a lot of our biggest problems actually come from fishers, you know, and they are poor. They are not the ones with the money. So we have, you know, another issue there. We also have issues with the rich polluters, but we also have another issue there with those who are coming from, you know, the poorer sides of society. And you've spoken about it already for the indigenous peoples and so on, that we have to be very careful in how we deal with them and ensure that they have livelihoods as well, while not having this negative impact. And then your question, this, I remembered it. We need to talk. We have to talk. We have to talk. The conservationists have to talk to the investors and not just shut off when you hear the word investment. And I think too many of us do that. And I still do it. I find myself in these forums with investors. You know, when Eric said he's economist, I was gonna like stick out my tongue or something really childish. But you know, you still have that initial reaction because it's still seen as a baddie. And the only way that we're gonna get over that is to talk, which is why I am so pleased that you invited us here to speak. Not Eric, he's an economist already. Because this is the only way. Marine conservation practitioners don't know about impact investment and blended finance, right? And then even when they do hear about it, they don't know how to start. They don't know how to start. I've been through finance 5 years. I can't structure a deal. That is not what I do, but you need to be able to know where to go to get that done. From the other side, the impact investment side, I mentioned we're working with Sustainable Ocean Fund and Althelia Morova's impact investors, and they are absolutely fabulous. Absolutely fabulous because their heads are towards the ocean already. But even with our beautiful, beautiful partners, you know, sometimes we have to go, okay, look, marine parks are not going to earn you a lot of money. So that return that you're looking for with this marine park is not going to work because they simply cannot afford it. So from the impact investor side too, we've had to caution a little bit. We know that you're going over your 3 pillars, environmental and social and financial. And we know financial is not as important as typical investors, or impact investors. And we appreciate that. That sometimes even that small return that you think it's small, but for a marine park, it's actually quite large. So we have to keep having these conversations and having other ways. Of course, we'll blend it. You know, we'll find the grants and so on to do so. But the financial expectations sometimes of impact investors is still a bit too high. And you know, the environment is new and we're all learning. So I would say that the main thing we need is to get in each other's spaces and each other's faces and talk and understand each other's worlds.
Thank you, Angie. You brought up 2 things that I want to throw over to other panelists. You spoke about governments and how we need to be working with them. Sophie, that is the core of your work, so I might call you in on that. And Angie, you also surfaced this idea of how you structure impact directly into the heart of an impact investment. And Eric, that reminds me of some of the comments that you made in the beginning. So maybe let's go to Sophie and then let's go to Eric. And then I have a question for all of you that I'll throw out after that.
Perfect. So I'll start then. I did just want to pick up on a couple of Eric and Vicki's comments around, you know, internalizing the externality, passing the cost on. Because one of the biggest challenges governments are facing, and this goes to what Angie was saying, is this idea of greenflation, right? We've all seen in the news the escalating energy costs, which have the potential to derail parts of the EU's Green New Deal, for example, the Yellow Vest movement in France, where this is all taking place in a fairly economically precarious position where it has the risk of having a backlash by lower socioeconomic consumers that feel that, you know, it's impacting the cost of their day-to-days and they can't afford it. So it's a very real problem that governments are dealing with. And you're completely right, Angie, when you're facing a population and issues of populism where this, a large proportion feel that the system isn't meeting their needs anymore, you tend to prioritize the issues of today, like healthcare and education, over the issues of tomorrow, which is climate change, as even though the cost of climate change and not addressing it are of course going to be worse than just doing something about it today, and nature and biodiversity more broadly. But this is where we're seeing some really creative financing solutions. So here I'd point out the Seychelles with their blue sovereign bond that they raised. They raised about 15 million, which they put towards a sustainable fisheries management plan. They also did the world's first debt for nature swap, where that was also, or debt for conservation, I should say, that was another 21 million going towards a kind of marine protected area. That's where we can, as the developed world, help parcel out some of these funds for the exact kind of nature-based activities that we really want to prioritize. The second point that just really raises for me when I was listening to that conversation is the need to balance nature and biodiversity solutions with socioeconomic development. And that's, again, where I think the blue economy offers such a potential opportunity. If I just think really quickly about Article 6 at COP26, one of the most important aspects of it is the potential agreement of ITMOs, which is internationally transferred mitigation outcomes. And what that basically means is that a country that generates excess emission reductions can then obviously go share that with above and beyond their targets, can then go kind of transfer or sell that outcome to another country. Now, small island developing states, some of them already, their marine areas capture more carbon than the country itself generates. So something, that kind of market mechanism would massively incentivize developing countries, and particularly small island developing states, to invest in blue carbon reduction and removal, which often coincides with nature preservation and regeneration. So I think there are market mechanisms to get there. We just need to be really creative and work with the public, within the public constraints of that as well.
So a couple things here. One is the Seychelles example, I think, is an excellent one, and it's a really intriguing example too of in a sense, the tensions that exist between traditional investment vehicles and really creative solutions like that, because I think the Nature Conservancy and partners probably literally spent years working with the Seychelles to try to put that together, and it's incredibly exciting, and hopefully models like that are replicable, and they do operate at a scale that I think a lot of other things that we all work on don't, and I think that holds great promise. But it does speak to, I think, with a little bit of that tension that you wanted me to speak to, which we have been experiencing within the SWIFT, which is that when looked at purely from a financial perspective, many of the environmental issues that we all work on do not fit very well into traditional structures. Either, an obvious one is, what I would argue is that investing in the recovery of seafood stocks, taking the pressure off of harvest from a fishery, it may mean that it takes years for that fishery to recover. And traditional investing is not kind to recovery that takes years because of the cost of capital and the impact of time on financial returns. And so in a solution like that, an investment that can return money to investors in the first year, 2, 3 years, it's just so appealing and so attractive relative to something that may be such a better outcome kind of overall, but takes even, let's just say, 5 or 6 years. And frankly, many of these recoveries take decades. So I think within the context of the investment vehicle that I was talking about, but these as well, kind of at some level that the dynamic of time is really something that needs to be solved. And there's an important role for either lower cost debt financing that can kind of take the impact of time off the table for those investors, or there need to be vehicles that accept lower returns and are willing to kind of, in a sense, kind of wait for that recovery. But right now, the capital markets, it's very, from a fiduciary perspective, it's very hard for traditional institutional investment capital to put money into vehicles that say they're going to be generating a lower than market return. So it gets really complex and requires a lot of creativity. I think it's where some of these things like carbon offsets, biodiversity offsets, and others that can, in a sense, kind of bring some of the financial returns to those investors a little bit earlier, can be incredibly beneficial. But if I had to put my finger on kind of any one thing that has been a big challenge as we've been structuring deals, it's time, and the expectations that investors have for generating a financial return in a relatively short amount of time that's out of step with most environmental systems.
If I could just step in for 1 second. So at least from my experience from Caliber with impact investors is, and I'm not going to, they get a return, a monetary return, but they also get the intrinsic value of delivering impact on a discrete project that generally has a 2 to 5 or 10-year time frame. So that intrinsic value is included in what they're getting in their return. And I 100% agree with you. When you go out and try to socialize that you're investing in large cap companies that have better biodiversity or marine ecosystem policies, and you're talking to a short-term audience, it's much like, and you can replicate it backwards with clean energy. Those clean energy funds took 6 years to finally come to fruition that invested in. We knew that change was coming, and we knew that change had to come, just like we do with biodiversity. But it's very hard to socialize, and I'm agreeing with you, in a large cap or an investor-based market where the time frame for these products to come to maturity is probably 3 to 4 years, and the investor has a 1-year horizon. So just one example, for instance, Oatly. I think probably everyone knows what Oatly is. They're not going to be profitable for another year or two. So for a normal investor, that's totally consistent with what I want to do, but most investors in the large cap space are looking for a 1-year return. And so there's a natural tension, but we have to invest in the future, and we have to start with what discrete projects that are based on conservation and larger scale projects to move forward the capital markets to have better policies. And there's a natural tension there, but I think it's all about education too.
Thank you. We have so many great questions. We're going to try to do rapid fire. This might be a terrible idea. If it doesn't work, I apologize. I'm going to read 3 questions and then throw them out to you all. Pick one, throw a quick answer out, and then I have one final round before we wrap up. Here are the 3 questions we've gotten that I might want to make sure to throw out. First one, in most discussions of impact, we're seeing a large emphasis on finance, like the tools and the resources available, but we're not seeing as much of a focus on the science to make impact happen. Why is that? We can't use the same theories that have brought us here, so what do we do about it? That's one. 2 is about the role of the private sector in capital markets in addressing ocean plastics. What are investments that you're seeing? And the 3rd is around the world's traditional practices. So I think we're referring to indigenous and practices like that are regeneration aware. Has the investment community taken note of that? And why don't we see more about that leading the conversation? So throwing those 3 out, everybody jump in, and then I have a final round.
Can I do science? It's the only one I can answer efficiently and effectively. Yes, we are looking at science. So we monitor the impact of finance, but also environment, also social impacts using what we call key performance indicators, KPIs. And there's science behind those, social science and environmental science. So with each MPA, and this actually is a requirement from the impact investors, to be honest. So each MPA, we go in and we look at what they have and we look at what they have to do. And then we kind of project. We say, this is your baseline. This is what you have here in terms of, reef fish abundance, in terms of nitrate levels, in terms of a variety of parameters. And those are the indicators that we look at annually to see how they change. And of course, we're hoping, that with the investment that we see improvements on each. Sometimes we don't, but this is what we're aiming for.
At Carner Blue Capital, we're using a siloed approach that I think I mentioned. We have one side of the house does fundamental financial analysis, but the other side is focused on not science as deep as Angie, but we're doing academic research on. We also have KPIs on the performance of companies in impactful industries and biodiversity or marine ecosystems. So we are a little different, that we have half of our folks do academic research to identify those material indicators, and the other half look for financial outperformance out of those leaders.
Sophie, you want to go next or you want me to go next?
You go next, Eric. I've already forgotten the second question.
I spend most of my time thinking about how to bring science and conservation technical expertise to people who think in financial terms. And back to Angie's original point at the very beginning about the need for dialogue and communication, I do think that that's really critical. It's great information. There's tons of amazing science, but I see it even in these funds that I'm working with a team to help support. But we don't all speak the same language. And the analyst building a financial model very rarely has the ability to take, say, what is in any one of those reports that there's sort of links to that Alyssa put in, and figure out how do you take that amazing information and data and ideas and put it into something like a financial model. And it's not just the technical expertise, it's like the terms, what do they mean, these concepts. And so that sort of translation across disciplines, I think is critical. The other is, there's a desire for certainty, and I think uncertainty and risk are well understood actually in financial terms, and there's existing models for that in the financial space. I don't think that same really sophisticated thinking has carried over into much of the other science that's being done, which is, I would argue, similar. It's just that those sort of ways to grapple with uncertainty aren't really well, the structures aren't really there. And so what I find is the financial folks keep asking for, like, what's the specific point solution on any particular issue? But most scientists who are, being ethical and high integrity would say, like, I don't know. I'll tell you one point, but then there's, a distribution of outcomes that it could be over here and it could be over there. And I think it becomes a real challenge for pulling in good science into the financial decisions.
And just to add to that, just one really specific example, because I think the research and the science point is so important with the oceans, because I mean, arguably we know more about space than we actually do our oceans. And when you look at something like deep sea mining, interestingly, a Canadian deep sea miner was acquired by a green SPAC, or special purpose acquisition company, earlier this year. And the big question is, well, okay, in a world of clean energy, we're reliant on mined metals and materials. We don't have enough of them in circulation at the moment, so we've got to get them from somewhere. Which is the lesser evil or greater good? Is it mining on land, mining in the ocean? Now, that's not as obvious an answer as we think, because mining on land, we've already kind of started to get to the end of the easy to extract deposits. So we're going more specifically into much harder ones, which have a greater environmental impact. But the massive caveat when you're dealing with the ocean is that you just don't know what that biodiversity impact is. There could be endemic species we haven't even discovered yet that we're potentially wiping out, which is why the research and the development and the science side, I think that's partially why a lot of these blue solutions have suffered a little bit, because there hasn't been as much scientific research and kind of funding into the area. And that is starting to make a difference. Like, we've seen some of the large auto and tech companies saying they're not going to use deep sea mined minerals until we know what the environmental impact is and until you can measure it. So I do think increasingly we are starting to raise the bar in terms of what we expect on the research and the science side.
Thank you. I think that's almost a perfect segue. Thank you all. I had another series of questions, but we have, of course, run out of time. So next panel that we're all on, I will ask those questions. I think that says it all. The ocean and coastal and freshwater ecosystems that we are talking about in this panel are going to be critical to solving the challenges that we're talking about, if we can solve them, and I hope we can. We're going to need to focus on these regenerative approaches in many different ways, in many different angles. You've heard about a couple of them here. There are others out there to reach a world that is equitable and sustainable, to Amit's point from this morning.